Hey, it's Chris, your private lending guy here, and in this video, I'm going to answer the question, why am I willing to pay such high rates of return when I can get cheaper money from the banks? You know, this is an insightful question, and the answer is this. I do it because the quick availability of funds is more important than paying a lower rate to the bank. Really, I look at my lenders like silent partners. I give them a high dependable and safe return. It's secured well by real estate, and they supply the short-term capital to grow my business. If you think about it, it's a win-win for everybody. Plus, banks are going to require applications. They always require extra time to close. They always require extra closing costs. And you know, they have limits as to the number of loans that they can make to any one company or investor. You see, I can move much faster without these limitations by using my private lenders. And as a result, I can negotiate more profitable deals while offering sellers a quick and easy, fast cash sale. Now, incidentally, making high interest rate loans, as you can probably imagine, it's nothing new, right? There are companies in our city and in your city doing it right now, and they've been doing it for over 40 years or more, and those companies are called finance companies or secondary lenders. Now listen, this is a multi-billion-dollar industry. We're talking companies like the Money Store, Coastal Finance, Beneficial Finance, Household Finance, Avco, American General, and these are just a few examples. All right. Now their specialty, the specialty of these companies is really helping people who want to refinance or who want to purchase a home to live in, but they can't qualify for lower interest loans. Oh, and by the way, before I get off the subject, I want to encourage you just to pull out one of your credit card statements and just look at the rate, okay? Well, congratulations. You are also a person like me who's willing to pay a high interest rate for short-term money. And why do you do it? Well, it's likely because that money is easy to get, and it's also likely because you're placing the availability of funds as a priority above the cost every time you use one of those cards. You know, like I said, this is a multi-billion-dollar industry, and that's the answer to the question, why am I willing to pay such high rates of return when I can get cheaper money from the banks? All right, if you've got questions around what I just shared, please email me back or send a text message to my personal cell phone. I'd love to talk more about it with you. Now, before I let you go, I would like to share another quick case study with you of a deal that we did with one of our private lenders. Okay, so here's a picture of the single-family home that we purchased using money from our private lender. I'll show you the math in a minute, but first, I want to remind you of that core belief that our company has that gives us such an unfair, unique advantage in the marketplace. And again, here is that belief. We just really believe a person who is paying $1,000 a month to rent would rather pay $1,000 a month to buy. And it's because of that core belief, we've engineered our entire acquisition department to buy deals at big enough discounts, not only to protect you as the private lender, not only to maximize your returns as a private lender, but really to put the math in our favor so that when we're putting a buyer into our property, that light bulb's going off in their mind and they're thinking, wow, this is amazing. I'm paying the same amount a month to buy this house as I would be if I was renting a similar size and type of property. Now, if you think about it, how does that protect us even more? Well, if we ever get into a situation where the economy starts to slide a little bit in the real estate market, put yourself in the shoes of the buyer. Why would you leave a house that you are in the home ownership position on to move into a rental when your monthly payment is going to be about the same? Okay, well, the logical answer is you wouldn't, right? You would figure it out. And that's just one way we create safety and security inside of our model. Okay, let's look at what's in it for my private lender on this particular deal. You can see here on the screen the investment was $160,000. The after repair value is sitting at $235,000, which is a 68% loan to value. Again, as a reminder, we don't go above 75%. Another way to look at that is we are always getting at least a 25% discount, oftentimes more, on all the deals that we do with our private lenders. Okay, our private lender is going to be secured by a first lien new mortgage. The investment term on this particular deal was 24 months, a rate of 10.5%, and then you can see the monthly interest income at $1,400 or $16,800 per year. And that's what's in it for my private lender on this deal. Okay, that's all I have for you today. Here's what to do next if you're ready. There should be a button somewhere around this video where you can book a one-on-one strategy call with me to get all your questions answered and really to see if private lending is a good fit for your investing goals. Now, if it is, what we can then do is discuss putting you into our queue so that you're positioned as close to the front of the line as possible for when our next private lending opportunity becomes available. All right, I'll even tell you on our call how to jump straight to the front of the line if you're someone who wants to go fast. Okay, and my personal cell phone should be somewhere around this video. If you have any questions, feel free to reach out. Texting is always best for me with the volume of calls that I get, but definitely feel free to call if that's preferred for you. All right, thanks for your trust. I don't take it for granted, and I will see you in the next video. To freedom.